Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at some of the semiconductors. Nvidia will be coming out later in a separate video, but I want to talk about in this video a sudden sell-off that we are seeing on Micron, most importantly SMCI as well, Broadcom, and also ARM. So these are the four stocks I want to talk about in this video, and what do we make out of these sell-offs? Are we still in the bullish structure? Is this just a pullback, or is this a start of a topping process in the semiconductors? Because it's just not these four, well, except an AMD, and AMD is the one that is a completely other way around. All previous days it was AMD going down, and today AMD is the one going up and other semiconductors are going down. This is Nvidia as well. Semiconductor has a really hard sell-off today, but Nvidia video, as I said, will be coming out separately later today. So let's start off with the semiconductors. Let's start off with actually SMCI. And before we go any further, I want to let you know that none of this is any financial advice and it's only for education purposes. Please do your own thing, and I'm just providing my opinion, nothing more than that. So SMCI, a strong sell-off right over here, but we were technically, well, still in the position that gave us a lot of move. And so this is where the structure was changed on SMCI. Let's go a bit of background here. $804 was the structure change back to the upside, and that's what I have been saying since then, that this can just continue higher, at least to the level of 972 is what I was saying, and into this pullback as well. As long as we hold above the blue box, we have been going up since thereafter. So this was the target, 972. Always take partial profits in the extensions, right? Today was a great day, we got another leg up, but then we are seeing a sudden sell-off. Now the question is, does this make SMCI structure bearish? Well, the answer on the overall structure of SMCI is that no, this is not a bearish structure to begin with. The overall structure. Intraday cool-offs, we'll take a look at that. But yes, those things may come to the downside as well and to the upside as well. Intraday plays we'll talk about, as I said, in just a second. So SMCI structure on this is still bullish until we are, in this case, above 50 and 20 days moving average. This is, yes, this is quite a big sell-off today. So what this could entail, just like on all other semiconductors, as I'll talk about in just a second, that intraday at these levels you can still see if the level holds, but I won't be surprised if we see a little bit deeper pullback. But anyways, we have to watch the price action at these levels, and then since that structure is still bullish, it's better that any rebound at these levels with the stop loss on the other side can be tried to be traded to the upside, but not in a hurry. Let's go to the hourly interval. Let's talk about what are we seeing here. So on SMCI, so technically if we had to stay on the intraday complete, this is now intraday. I already talked about the swing structure. Now intraday, this is a different perspective here now, as for if you want to trade intraday up or down. On intraday, we would have been in a better place if SMCI would have closed above 945. Now SMCI has closed below 945 and broke below that. Now the play on this is that if we can get above 940 to 945 tomorrow, this thing may go again, start to go up. However, if this is where it rejects, right, this can either stay down here because we do have 50 hours moving average, some support here, but if we zigzag here, but then we fail to go again above 945, then break below 50 hours moving average may give much more downside. But right now, anything above 910, if the rebound starts to come at 50 hours moving average support with the stop loss on the other side, this thing can still go up. But at this point, I would say intraday play would not more than 945 first. That's the first level, and the next level would be 971. That's when we have to see if another pullback comes, and then we see if that pullback holds or if it goes in the distribution phase here. But yes, the move to the upside was this, pretty much what we talked about. Now it's going into the cool-offs mode or choppiness and distribution phase, but intraday up or down as for the levels that I provided, both can be traded intraday short or long. But the swing overall position, the extension seems like has done its job. Now it's all about can intraday continuation turn its continue up. But yes, overall structure is still bullish into even much more deeper pullbacks if they come. Overall structure technically is still bullish on this, but it's not that if structure is bullish then overall then every day is still going to go up. No, there will be pullback days and cool off days. Okay, all right, let's talk about now Micron. So Micron is in a bit of a deeper sell-off. All right, this is again, well guys, hey, wait, hold on a second. This was a great move, right? All what we have been talking about. So take profits in the extensions always, partial profits out. Now, what do we make out of this today's sell-off? It's quite a deeper sell-off, yes. So look, you won't believe me or you might say I'm crazy, but structure on the daily interval is still bullish on this thing. What do I mean by that? It has still likelihood that at intraday levels, after this big huge red candle, there are still possibilities of trading intraday longs. You know, there's structural support sitting at 134, 139. If these levels holds on intraday, like double bottom consolidations, these levels can still give you intraday long. In my opinion, if it has to fall, it will go through first some distribution phase, but through the distribution phase, since we are in the uptrend on the daily structure, this could still be waited for the pullback and intraday longs can be traded. All right, going to the hourly interval. Now, those intraday upside, at least intraday has to be taken day by day. And if that has to happen, we have to hold above 144. If we do that, there's a possibility we can come up to 148. But intraday, that's what only I'm comfortable at until, or even a little bit higher, 150, not more than that, at least for now. What the price action is telling me, this is for tomorrow. And then if we break 144, you are watching some more cool off that may come down to 139 and then that 200 hours moving average. All right, structure, this one red candle on Micron doesn't make itself a sell-off or a bearishness. No, it just signifies that potentially there is a start of distribution phase, but through the distribution phase, since there are a lot of levels sitting in the uptrend, intraday's long can still be traded. And as if that levels up on the top starts rejecting, and that I just talked about, some scalp short can also be taken. But it's better to trade, as we are in the uptrend, it's better to trade long intraday into the pullbacks. And but the overall structure on this is not bearish. But this is not the time that you just, if you are in profit already, if you bought here, I would suggest take partial profits, because you have to take partial profits in the extensions. All right, so that's that. All right, let's go to Broadcom. Oh, well, let's go to ARM and then we'll wrap up with Broadcom. So ARM, again, a strong sell-off, just like all other semiconductors. However, structure on this is not bearish. 150, we are above that. I have been saying on this, we are still bullish as long as we are above 150 in the overall structure. But look at it. These huge moves that I have been talking about since even $97 that I have been saying $164 is a possibility, and we are more than that. So you should be happy. Take partial profits, take profits in the extensions. Anyways, I'm only providing educational opinion. I take guarantee of nothing. But still, things still works out as how I explain. Okay, so 150 is the level to watch. Similarly, just like I have explained about SMCI and Micron, same is the thing with ARM as well here. ARM may give some upside continuation if we get above 163.96 intraday plays only right now, right? And then if we break 150.76, then you can watch 150 and try another upside there. With the 200 hours moving average support, and some intraday's upside may come from there as well. All right, that's the way to trade ARM as well. All right, guys, let's take a look at Broadcom. So Broadcom also quite a deeper sell-off, but that's fine. These are take profits in the extensions, right? Now, the thing is that, is this a start of a deeper pullback on this thing? So, because it's already quite high up there, right? So let's go to the hourly interval. So that's one of the trend lines that we have been forming on Broadcom, lower highs on intraday, right? And this was the very level I talked about right over here, 1728 to watch this, right? So right now we are finding some support here, but intraday only play it long if tomorrow we start to go up and get out of this trend line, the one moving downtrend trend line, intraday trade only. However, and if we reject this trend line, the moving lower trend line, this may continue lower. It's very simple trade with Broadcom, just trade with the trend line. As on the structure, right? Guys, so here's the thing. It's extended, but that was the potential after earnings, right? That gap up happened, right? I won't be surprised if we see some more downside, but just work with those trend lines and the levels that I provided on hourly interval, all right? And right now, it's because we are seeing that in the structure, all these upside that we have done for so long, we have taken those great moves. Now is the time that some cool off is coming. But this cool off overall structure is still not making bearish these semiconductors. But this may result in, that's what we have to see now over a couple of days, that does this turns into distribution phase? Does it turns into the downside? Is it going to eventually break the structure from upside to downside, which right now it hasn't done that. So distribution, and well, as we will go through the distribution phase, these moves intraday at those levels, as once they confirm the support on price action, can be traded long. And since we are in the overall still the structure upside with the stop loss on the other side, it's still a little bit more comfortable and to trade to the upside, but don't trade upside blindly. Don't buy the falling knife only if those levels hold and the structure hold as for the levels that I provided. When the structure will fully break to the downside, I'll talk about it, but we will have to go through the distribution phase first. But as I just explained, through the distribution phase, you will have intraday longs, because that's what distribution phase does, because we are still in the uptrend, all right? So it's because there is no guarantee that this even will result in distribution phase. This might just continue higher. So your better likelihood to stay still is on intraday. Don't do swing right now. Swing time is already came, and we have taken those profits in the extensions. Now is the time to only trade intradays for a couple of days. All right, that's it for this video, guys, and I'll see you in my next one. I'll be doing NVIDIA later today, and yeah, take care. Bye.